Welcome to Ironworth Trading. I'm your host, Coach Price. I'm a little bit late tonight. But hey, this is educational information. This is not financial advice. Okay? We're just going to do a lot of teaching and a lot of learning going on. I will not be giving out financial advice. I don't know you personally. I don't know your situation, so I can't give you personalized financial advice, right? All right. So you don't need a lot of indicators and cheat codes and all that shit. You may think you do, but I'm going to give you exactly what you need tonight, all right? I'm going to explain it to you before I go deeper into the charts. Before I start talking about headlines and money, I need you all to understand what we are really doing. All right? See, we're not just learning how to click buy and sell, right? We're learning how to think clearly whenever the money and the emotions are mixed together. So I'm going to let a few more people come on in before I get started. I appreciate y'all for tuning in. Go ahead and tap the screen. I need y'all tapping while I'm yapping. If you're listening to me on YouTube, go ahead and hit the subscribe button for me. Hit the like button if you haven't already. I appreciate it tremendously. Come on in. Let's let the people come on in. So really, knowing how to think clearly whenever your emotions is mixed in with you having money on the table, this matters in the stock market, but it also matters in life. See, a lot of people don't fail because they stupid, y'all. I'll tell you this all the time. They fail because they panic or they rushing or they copying somebody, right? Or they might refuse to slow down enough to understand what game they in, okay? So the stock market is going to expose that type of behavior super fast. So tonight we pretty much not just building a trading skill, we are building decision-making skills, ladies and gentlemen. That's bigger than just a ticker symbol. You understand? Now, a beginner usually think that the stock market is a place where smart people make predictions, but that's not the case. That's only part of the truth, right? All right. Now, the market is really a place where opinions get tested with money. You understand? This is a place where you put your money where your mouth at. Opinions get tested with money. Hey, yo, whoever tapping the screen, I appreciate you. Hey, it's my boy, Cool Nerd, man. What's happening? Cool Nerd in the building, ladies and gentlemen. Thank you, brother, for the likes. I appreciate you so much. Hey, if y'all new here, go ahead and hit the follow button so you don't miss another live stream. Hit the notification bell. All is well. All is well. All right. So, again, this means that you could be smart. You could sound smart and still lose in the stock market. You could be loud and still be wrong. You can even be right about the news and still lose money because you entered at a bad time or you managed that trade horribly. You just managed it wrong. So that is a hard lesson to take, but it's a healthy lesson I think everyone needs to, encounter. So in life, people, they usually get rewarded just for sounding confident, right? Right? But in the market, confidence without discipline will get you punished. This is why it can humble people so fast. Trading will humble you. It don't give a fuck about, how certain you are. Sorry, excuse my French. I was doing so well with not cursing. It doesn't care about your certainty, right? But it cares about what you do when reality does not match your belief. What do you do when reality does not match what you thought was going to happen? I hope I'm sinking through. I know some of y'all got some thick ass skulls, right? Some of y'all, not all of y'all. Some of y'all, but yeah, a hard head. My mama always used to tell me, a hard head gonna make a soft ass. So you will learn the hard way, right? Sometimes the hard way is the easy way in life. And the easy way, you really taking the harder route. Y'all hear me? How is my audio? Can I get a mic check? Mic check, 1 2 1 2. Yo. All right, so look, most new traders and beginner investors, because I know I got some newbies in here, and y'all pretty much who I want to cater to tonight. ladies and gentlemen, the new people, the new traders or beginner traders, beginner investors, you guys, ladies and gentlemen, that's who I really want to reach out to tonight. Okay. So you think that your first problem is knowledge. You like, if I could just learn a few terms, I'm gonna be good, right? Nah. Your first problem when you are new to investing or trading is your behavior. It's usually behavior. Don't get it twisted. Now, the knowledge does matter, but your behavior will decide whether or not that knowledge can even be used. See, knowledge is not power, ladies and gentlemen. Applied knowledge is power. Okay? Applied knowledge is power. So a person can learn what support and resistance mean and still lose money because they chased after a move after it already ran. You understand? A person can learn what earnings mean after I sat here and taught them for an hour about earnings season. They could sit in the live stream, learn it, and still lose money because they bought the options right before the event and didn't have a plan. Also, a person can learn what the Feds is after I just taught them for an hour too and still lose money because they traded during a speech when the market was chopping after I was very clear. So, yes, I'm going to teach you terms, but I also realize I got to teach you self-control. Now, how can somebody outside of yourself teach you how to control yourself? It's kind of hard to make a horse drink water. You understand? I could lead you, but I can't make you drink the water, right? But that's my job, teaching you discipline. It's my duty. It's my duty. Top flight security of the world, Craig. Security. You hear me? Like, you got to secure the security. You have to secure the security. All right. So self-control is not extra credit, ladies and gentlemen. It is a part of the strategy if you did not know. If you did not know, it's a part of the strategy. Now, I'm going to go deeper on the indexes because I've seen a lot of beginners keep making the same mistakes, right? They pick the same stock. They pick one stock. They're going to stare at it, right? They're going to pick one stock and they're going to stare at it. And they're going to ignore the overall. They're going to ignore the overall market. They ain't going to pay attention to what's really going on in the overall market. And that is like trying to understand one fish and you ignoring the water that it swims inside of. That's what you're doing when you're looking at one stock, ignoring everything else in the market. All right, so the major indexes is going to help you read the environment, ladies and gentlemen. The S&P 500 gives you a broad view of large United States companies, right? Let me show y'all real quick. The S&P 500, there we go. Yeah, SPY. This is going to give you a broad view of, let's say, large companies, large United States companies, right? And then you got the NASDAQ, which is known as QQQ. That's going to give you a heavier look at technology and growth names. All right. So then you got the Russell 2000. That's going to give you more of the smaller companies. And that can tell you how brave or how cautious money is feeling at the moment. Right. You use these indexes as gauges to help you know what, that's like a thermometer. So if your stock is trying to go up, but the broad market is weak, and then you got the small caps, they getting sold hard, which is not happening right now. But yeah, your stock is fighting the current. Can it still go up? Yes. But I need you to understand, overstand, and understand the difficulty level, right? This is how beginners stop being confused. They're going to stop looking at one chart in isolation, and they need to start reading context. You understand what I'm saying? Anybody still confused on what an ETF is? This is one of the best things that you can learn as a beginner because it's going to reduce a lot of clutter for you, okay? An ETF is an exchange traded fund. Instead of trying to learn the personality of 50 individual stocks, you could just study a few ETFs and learn how the market behave, okay? So think of SPY like a quick health check for the whole market. Let me see. Put a W in the chat if you with me, if you hear what I'm saying. Let me get some engagement, y'all. Let me get some engagement. Put a W in the chat. This is my attendance check to see if you in class. You know what I'm saying? So when I say your name, raise your hand. You feel me? When I say your name, raise your hand. I just want y'all to drop a W in the chat. Dino was happening, King Reed was happening. Then I went on, proceeded to say names. But no, I appreciate y'all for dropping the W's. You feel me? Y'all follow instructions, so y'all got, y'all got my attention. I give you mine. I give you my, I pay attention, right? So what do y'all need to know? I got a whole curriculum right here, but do y'all need to know anything specific? Because y'all, responded. I value that. Some of y'all at work right now, so I know, And then I know there's some ladies in here, they come in here just to listen to my voice. They don't really, some of them, not all of them, just some of them. So when they don't engage, I don't be mad. I don't go to kicking people out. Adrian, what's happening? Your favorite company got earnings coming out tomorrow, don't it? What's happening? What's happening? Again, so think of, she said, you already know. So think of sector ETFs like financials or technology. You can use those type of ETFs as a way for you to see where the money is flowing, right? I'm about to get into that. Rahu, I don't even know how to pronounce your name, Ali. That's a crazy name to try to pronounce. But yeah, anyways, so you want to pay attention to these because simple done consistently beats complicated done emotionally. ETFs help you learn structure before you get lost in the weeds. We know about indicators, right? Like EMAs and, MACDs, RSIs. Most of these are lagging indicators. Have y'all ever heard of leading indicators? Can someone in the chat tell me what is a leading indicator? Because all the indicators that you put on the chart are lagging, meaning it's showing you what has already happened. It's already been confirmed. The reversal in the trend has already taken place. But what is a leading indicator? Okay. Jim Carrey said we're going to 685 tomorrow. What makes you so sure, Jim? All right. A leading indicator, ladies and gentlemen, is just an early cue. Thank y'all for liking the live. I appreciate it. So this idea of a leading indicator, it applies to everything once you think about it. When you look at your health, right? A leading indicator to check your health, it might be your sleep. Your sleep might be getting worse before your energy starts to crash. Okay? Relationships have leading indicators that people ignore. Okay? Y'all call them red flags. A leading indicator might be poor communication before a big ass argument. Okay? Even business and entrepreneurship. A leading indicator might be you ain't have enough leads. Right? And now your money started to drop. Your money finna drop because you ain't have enough leads. Somebody says, I lost 3,000 today playing calls. I want to talk to you real quick. You hold that thought. What's happening, Frank? From Florida. Everybody else, go ahead and drop what city and state you listening to me from. Everybody, it's a roll call. This how we take attendance. I want to see who all in class. Frank with Bank, we finna go over a lot of things. We got New York in the building. New York, I'm gonna say something to you in a second to help that. I'm gonna help that never happen to you again, New York. Stay tuned. Jim Carrey said on Friday we was at 682. Okay, you telling me why you so sure? Where you from though? Where y'all from? We got Palm Beach in the building. ATL, what's happening? Georgia, what up, y'all? Just real quick, come on, drop your city and your state real quick. Rep your city, and I'm gonna continue with the class. This is how I take attendance. Hollywood in the building, Washington in the building. Come on with it, y'all. We taking attendance. Let's go. New Jersey in the building. Where y'all listening from? LA, California. We got anybody outside the U.S. listening? Could you let me know if my read is off, please? Yeah, of course I will. I'm about to go over it in a second, actually. Boston. I got you, Frank. LA, Cali. A lot of West Coast. I was looking at the 1 hour and the 15 minutes. All right, Jim, I got you. Hold on. I'm going to actually teach you, if you don't know already, if a lot of y'all about to learn the orb strategy tonight because it printed very well today. Simple, textbook ABC. It's easy ass strategy. You hear me? It worked very well. Orbis Fire, says Jim Carrey. That's what's up. Anyways, though, look, check me out. Hear me out. I'm glad. Thank y'all. I appreciate everybody that gave me. I appreciate y'all for the encouragement. So all I ask is that while I'm yapping, I need y'all tapping. If you haven't already hit the follow button, go ahead and tap the follow button right now. Right now. Right now. That way you don't miss another live stream. Hit the notification bell too, because then you won't even know when I go live. If you don't, you just gonna follow me just to follow me, right? I'm just gonna get thrown into the follower pile. Hit that notification bell so you can know when it's time to come to class. All right. Now, we were just talking about leading indicators versus lagging indicators. See, when you put an indicator on a candlestick chart, it kind of give you a heads up on what has already happened, right? Kind of like you can use it as a cheat code, okay? If trading was a video game, indicators is like cheat codes, but you got different type of indicators. And we was just talking about lagging indicators versus leading indicators. Now, in a leading indicator, you pretty much gonna get a heads up. It's an early cue. That's it, an early cue. This is a flag. Hey, you might want to look out for this. We was talking about how this idea applies in more than just trading. It applies in health. You're going to see it in your health. You're going to see it in relationships. So in the market, a leading indicator is basically a cue. It's a clue and a cue that's going to tell you whether people are getting more confident or more paranoid, or shall I say cautious, right? Before the full move becomes obvious. Beginners always wait for the big obvious signal because obvious feels safe to them. The problem is obvious is going to come late as hell. By the time you get in, it's a little bit too late. You ignored the leading indicators and you probably riding off, you probably copying somebody else, so you get the trade super late. You don't get in, you don't get the, hey Frank, when you stay ready, you know what they say about staying ready, Frank, you know what I'm saying? When you stay ready, you don't got to get ready. Not necessarily, Kel, but I will talk volume in a second. I'm speaking leading indicators. That see, volume is more like a live indicator. It's right now, right at the moment in type of indicator. It's showing you what's going on right now. It's a confirming indicator, right? It's giving you confirmation. A leading indicator is before that. So you got different things that would count as a leading indicator. Now, you also want to talk about these small cap companies, right? But I just wanted y'all to know that if you learn how to read them early flags, them early clues, that's how you stop living in reaction mode. But now the small cap companies, right? How many of y'all investing in the small cap companies and you eating good off the companies that's, the ones that everybody overlooking right now for the most part? Huh? Small cap company is basically a company with a small market cap. So I like small caps because it's a good way to learn. Like they're gonna show you market courage and market fear in a simple way. You see what I'm saying? So when people feel good and they want more upside, they usually willing to buy smaller companies because they can move more. Well, for one, somebody asked me what I'm looking at here. How about this? Here go. I don't even know if I can somebody confirm whether I can call this a small cap or not. Who can confirm whether SoFi is a small cap or not? Okay, we got it definitely in the chat. Okay, it's a good one. This is not financial advice. I'm just answering the question, so don't get carried away. Don't get your horses in a bunch. But I want to point something out. Yes, Project, you want to know why I say that? Because SoFi was $18 5 years ago. But, okay, it was $18 a share 5 years ago. It was 1.9 million members back then with 360 million gross profit. Now, 5 years later, same price, different company. Shout out the boy, the Panda. Y'all see what I'm saying here? But anyways, before I get carried away, I don't want to get ahead. I know I got a lot of beginners, y'all, who I'm talking to mainly. I don't want to get carried away. All right, so like I said, when people when they feel good, they want more upside. So they willing to buy these smaller companies because these smaller companies can move more, right? These smaller companies can move a lot. They can move more. You see here back in 2021, SoFi closed around $18 a share. Same price it's at now. Somebody says, don't hesitate. I bought it when it was 14. Well, I don't know about don't hesitate. Just don't be stupid, Five Stupid. You feel me? We're not going to be stupid. You funny, your name's stupid. I know you're not stupid. You're going to make TikTok think I'm calling you stupid too. Going to get me in trouble. But yeah, you're right. It is a good buy. It is a good buy. TikTok, that's his name, TikTok. We love TikTok Shop. I do not promote bullying in any form or fashion. All right. Or buy what you can afford to lose, honestly. Somebody says, I bought 300 shares today, but I'm running out of cash. Well, Johnny, you should dollar cost average, Johnny. It might have been smart, Johnny, to buy 100 shares and then, or 50 shares and then 50 shares and then 50 shares and then 50 shares on a weekly basis than to just dump 300 shares in today, right? Or it's called dollar cost averaging. And there's other ways. You didn't have to do it like that, but there's other ways, okay? Somebody says, glad you cleared that up. My timing was crazy. I just got here. Oh, yeah, I don't know what I said, but hey, I plead the fifth. Now, small cap companies, when you see small caps weaker than the broad market, right, this could be a sign that the money is getting defensive, right? So I want everybody that's new to trading to hear me out. When you hear one signal, when you see one signal and act like you found a holy grail, no. A signal is just a clue. It's a blues clue. It's a pop face ad. I'm a 90s baby, y'all. I'm sorry, I can't help it. But listen, I'm just saying, that's all it is. It's not a command. You don't take one clue and build a whole fantasy. You stack clues. You're gonna look at the small caps. You're gonna look at the banks. I want to look at the whole market. Some of y'all don't even pay attention to the bond yields. You don't look at gold. You're not looking at gold. You're not paying attention to the headlines, right? I don't get that. Somebody says, I bought Palantir when it was 50. Okay, I can dig it. MasterCard and Visa about to die. That's right, Steel City. I'm going to go over that too. That's a part of the news today. But yeah, like I said, you got to check some other things, right? You got to look at gold. You got to look at the headlines, and then you get to form a working view from there. Right? This is how a grown-up think. This is how grown-ups think. One clue is only a whisper. Several clues put together, now that's a message. That's like, hey, wake up. Somebody says made 600 on gold today. Watch DXY when you're trading. That, by the way, if you knew. What else we got in the comment section? My bad, y'all, if I missed a comment. Let's see. Let me take a second to read some comments. F is 1, 2, 4. You talking about 4, Honcho? Steve Madden for the small caps. Yeah, for sure, y'all. Now, I was just talking about, what was it, SoFi? You talking about SoFi, right? Yeah. Now, a lot of beginners ignore bank stocks because they chasing some popular shit that they want, usually NVIDIA or something, right? Big mistake. Like, the banks can tell you, somebody else said something about a bank in here too, but the banks can tell you, when you pay attention to the bank stocks, right? They could tell you a lot. I'm telling you, they can tell you a lot about confidence in the entire system. These are tied to lending. It's tied to credit. In business activity, it sure is, JB. We just talked about SoFi for a minute there. It was $18 5 years ago, JB. Same company. No, really different company, because it was only 1 million members back then. It's like 13 million members now. All right, paid subscribers. Now, if the bank stocks are under pressure, that could be a warning that the market is worried about growth or is worried about risk. So you don't need to become a bank expert. Hear me out. You just need to respect the fact that money will usually speak through the financial sector very early. This is a leading indicator. I'm teaching you what a leading indicator is, the type of shit that you pay attention to. And when you see that happen, if you move right and position yourself right, you can make a lot of money. Because if you listen, if you stay ready, you don't have to get ready. Getting ready is not looking at a lagging indicator and then making a decision after the shit has already moved. You understand? You understand? Now, you don't need to be a bank expert. You just need to respect the fact that money will move through the financial sector first. So the banks are not magic, right? It's just it's a useful gauge. That's all I use it for. I think of it like a dashboard light in the car, right? So the light ain't going to tell you every detail about the engine, but it is going to tell you to not act like everything fine when the smoke coming out the hood. You feel me? You feel me? Now, I was talking about gold for a second there. I want to go back to gold for a quick second. So whenever the market gets nervous, the money usually, and I'm starting back to do it again because gold and silver has become a safe haven again. But money will move into what people call safer assets, ladies and gentlemen. Think about it, okay? The stock market started to crash. A lot of people get worried and they want to move their money into a safer asset. Gold will get attention whenever uncertainty starts to rise in the market. U.S. government bonds also get attention, right? It's like, so for those that don't know, if you buy a 10-year, let's say you buy a 10-year bond, and so the maturity date is in 10 years, it's $1,000. You pay $1,000 now, and you receive interest up until that matures. You get your initial investment back at the end, and you just collect the money on it the whole time. That's pretty much what bonds are. Do your own research, okay? Just go look it up. I just want to give you that little quick cram course. Now, the bond prices usually go up and the yields often go down. So if the stocks are falling and the yields is dropping, that can be a sign of caution. This is another leading indicator. It does not guarantee that disaster is on the way, but it does mean, people are acting more defensive. Again, the lesson is not prediction. The lesson is reading behavior. That's what we learning right now. All right. So a lot of y'all get fooled because you only want to watch one or two famous stocks. And that's how you're going to end up thinking that the market is strong while most of the stocks is actually struggling. I'm paying attention to how many stocks are going up compared to how many are going down. If only a few big names is holding the indexes up while everything else is weak, that is not strong, healthy participation. That is narrow strength. Narrow strength can work for a while, but it's less stable than broad strength. You know what I'm saying? The same goes for weakness. JB says, so what are the main things we should be watching? For leading indicators, or you mean, ETFs, JB, we was talking, how ETFs are, like you can just check pretty much what's going on across many different, sectors instead of just looking at an individual stock. But we were talking about, leading versus lagging indicators. And you want to know, what do you want to know? What are some leading indicators? Huh? Or be more specific, because I appreciate you for asking the question, y'all. If y'all got any questions, please feel free to ask it. And if I missed the comment, I will double back. If you just say, answer my question, just say something. Say something, y'all. I'll answer the questions. When you think Bitcoin, where do you think Bitcoin going to? 50K, then 200K. That's broad as hell too. Don't quote me. Somebody says of what to look for if everything is going to tank. Okay. Yeah. So banks, CPI information, not even CPI, what they call it, GDP, gross domestic product. You can see a lot of these things are early clues. So for the economy or the market, some of the most watched leading indicators for me would be the jobless claims. I look at that information. I'm looking at building permits, housing start. I'm looking at credit spreads, if this, you got to pay attention to a lot of stuff that is outside of just, the news. And a lot of people only use lagging indicators. They use RSIs and MACDs. Those are cool to use. That's fine. But this is useful because it's going to help you prepare. All right. But enough about that. I don't want to get too carried away on lagging indicators because it'll put y'all to sleep. I'm telling you. It's nerd out. This for the nerds. So if you like to nerd the fuck out, then you cool. You will be happy here because you learning, right? If you enjoy learning, you cool in here and you cool in this live stream. But some people, they be like, bro, I don't know what the hell you talking about. And if you one of them people that don't know what the hell I'm talking about, say something so I can turn it down a notch. I will come down to your level, right? And don't be ashamed when I say down. Down just means you starting at the first step. Don't mean nobody better than nobody. You got to climb this ladder, right? I'm gonna help you up the mountain. You understand? Swan said, turn it the fuck up. All right, say less, Swan. Swan said, turn it up a notch. Some of y'all don't know what price stand mean. You in any spy shorts? Hey, Steel City, I'm waiting. I'm about to explain that too. I'm waiting, Steel City. I've been honestly short term, 0 days to expire, maybe 1 or 2 days to expire since they added, a few of those to the market. But yeah, this phrase priced in it usually gets used very lazily. People will say shit like priced in, and it just means that we are already expecting something and we traded ahead of it. Right? We already expected something and we trading ahead of it. Yes, I do gold and silver futures. Hell yeah. So whenever we think something priced in, we remember I told you, if you stay ready, you ain't got to get ready. So by the time the news arrive, by the time the video got earnings, the move may already have happened, right? You just didn't know. This is why a stock can get good news and still fall. The market may have expected even better news. Okay, so NVIDIA could have good news, but if we expected better news, that could be a problem. This is also why the shit could fall. It could get bad news and barely drop though at the same time. So a lot of people already sold before the announcement came. This one bad idea will save a lot of y'all a lot of pain because it's going to teach you to stop treating these headlines like it's an automatic buy or an automatic sell button. Right? So the market is not grading the news headlines. It's grading the difference between what people expected and what actually happened, aka implied volatility. What's up, Wesley? Somebody says, whatever the fuck Tesla stock be doing. Oh my, yeah, don't get me started on Tesla. I did trade TSLL today. I only have $300. What option trade should I do? Love Cisco. You should go watch my YouTube video entitled how to use a stock option screener so you can learn how to look for stocks that are within your price range, because you can only afford to do certain ones with that limit on you. You know what I'm saying? So you shouldn't even be looking at shit that costs any more than what you could buy. Somebody says, bro, so you think it goes up or down from the video? Oh, white tea is not about what I think. See, I'm going to explain something to you. I was just telling you about the S&P 500. NVIDIA is probably the heaviest fucking one. I think NVIDIA is the heaviest. It's the most weighted stock in that basket. Somebody please correct me if I'm wrong. Is NVIDIA or not the most weighted stock in that ETF? I'm trying to go big or go home. I don't give a fuck. Let me know. Love Cisco, chill. You funny as hell. It's the biggest in the world, says Wesley Fancher. Yeah. Looks at K8 and K9 for NVIDIA. True, that largest percent of the index is yes, that and Apple biggest company, right? AI wrote 200 lines of code 4 days ago and reshaped the software industry, including NVIDIA, says Mr. Stay Ready. Mr. Stay Ready in the chat. We just talked about getting ready, so staying ready so you don't got to get ready. So I remember when you were Darth Trader. That's right, Stephen Pack. What's happening? I'm still Darth Trader. You know what I'm saying? I'm still Darth Trader. It's going down after earnings, even because even they. Hold on, bro. Hold on, White T. Hold on now, White T. Let me make sure I ain't tripping. Make sure I ain't tripping. It's going down after earnings because even if they beat, it will go down. Okay. Just making sure I wasn't tripping. Maybe if guidance is bad. Yeah. So NVIDIA is also a powerful tool for me to teach y'all with because it's going to show you how one company can affect an entire market's mood. It's not about what I think. NVIDIA is tied to the AI story, ladies and gentlemen. AI is not just one company either now. This is a web, a big spider web. And NVIDIA got their hands in, all corners. So, yeah, it's not just one company. It is a whole chain of chips. I ain't talking about Lay's and Doritos and shit, okay? It's a whole chain of servers, right? And not the kind that bring you fucking food. It's a whole chain of data centers, software, spending plans. So when NVIDIA reports their earnings, the market is listening for the barrels, for the blues clues, for the clues. It's listening. We trying to see what's going on. We want to know what's going on about the bigger AI spending story. We need to know. This is why a lot of beginners should stop thinking of earnings as just, did they make money? Nah, that ain't what earnings is all. It's not about whether they made money or not. It's not all about that. Earnings is also about what management says is going to happen next. So we get to actually find out what this company got in store, right? Are customers still buying? Are the orders strong? Are the profits healthy? Is demand growing? Is it slowing? This is going to teach you a crucial lesson, which is the market trades the future more than it does the past, ladies and gentlemen. Okay? What we expect. I can't stress that enough. I can't stress it enough. All right. For those that don't know what earnings is, I'm sorry for everybody that do know. I got to help my people that don't know. I'm here for them. You know what I'm saying? That's really who I'm here for. I'm not here for y'all big ass grown-ups. Y'all know what y'all, I'm here for the baby traders. They need to know because ain't nobody tell me shit. I had to learn the hard way. So listen, a big earnings event, first of all, let me slow it down. Earnings is when a company reports what happened in the last quarter. The market compares that to what people expected. If the results are better than expected, that is usually called a beat. That means they beat earnings. Okay. So remember that. If the results are worse, they said they missed earnings. That is a miss. Then comes the part a lot of y'all ignore. The company gives guidance. You understand? That's what earnings is all about. So a stock can miss and still rise if the future outlook is stronger than expected. This is where I want to teach y'all to watch the reaction, not just the headline. Bro, AI agents took 96% of profits from the stock market since OpenClaw been out. Mr. Stay Ready, OpenClaw got some shit going on with them right now as we speak. Right now, if I am not mistaken, I don't want to lie because I don't want them suing me or nothing. But last time I checked, let me see, make sure I ain't saying nothing crap. I don't want them coming for me. But I think they in the middle of like some bullshit right now. Yeah. I ain't tripping. So, is it Anthropic? Anthropic accuses Chinese companies of siphoning data, right? So, the accusations include Anthropic says DeepSeek, Moonshot AI, and Minimax set up fraudulent accounts on Claude. These companies prompted Claude more than 16 million times to train and improve their own models. Anthropic says more than 24,000 fraudulent accounts were used. OpenAI sent a memo to the U.S. House accusing DeepSeek of the same shit. The AI arms race is heating up, ladies and gentlemen. Oh yeah, it is getting interesting. Claude, Ray and Claude. Live, 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 live. It's getting interesting, Mr. Stay Ready. So yeah, like I said, a big earnings event can attract, a lot of new investors because the moves that you hear about during earnings can be dramatic as hell, but that don't mean it's easy. That don't mean it's easy. Mine's too, Dutch. That don't mean it's easy, right? So whenever we got event weeks like the one we got now, earnings events real bad like the one we got now, it can create traps. It can create traps because expectations is already high. The option prices is going to be what? Who knows about the price of? Who could tell me is the prices for these options going to be cheap or expensive? Is they going to be expensive or cheap when the expectations is high? Would like your input on PayPal. $50 call. Inbox me, Wesley. So I don't got to get off topic. AI agent bots will open claw turn nobody into somebody. Yeah, man, they going in. Expensive. That's right, Scott. They're gonna be more expensive. All right. So whenever we expect, if the results come in to the point where, literally these weeks that we in right now can create bear traps, because if the expectations is already high, the option prices can be expensive. The first move can reverse fast. You understand what I'm telling you? I know y'all like certainty and speed. Earnings week is not going to give you neither one of them. You ain't getting neither one of them from earnings week. So I'm letting you know that now. You don't need to trade NVIDIA earnings just because it's NVIDIA, just to try to be important. You know what I'm saying? You need watching and learning is also a valid use of a big event. Actually watching the damn event, not just trading it. A lot of y'all never watched never paid attention to an earnings event ever. You don't care. You just know they got earnings coming out and that's all you know. No, I want you to actually challenge yourself to sit through an earnings event and learn something. Learn something about entrepreneurship, learn something about investing, learn something, about trading, about leadership and guidance. You get to learn a lot through an earnings, a company's earnings. Yeah. All right. So the Feds, they also isn't something else I pay attention to. The Fed is going to move the market. Y'all know about that? How many of y'all been in the trade? The Feds have a speech and they fuck up your whole trade. Somebody says no human being can trade faster or better than an agent. Now they spooky. Oh yeah, they going crazy, man. With them algorithms is different. They trade different, man. You can't trade against them. That's who on the other side of most of them trades. Tariff word, man, every time. Yeah, Wesley, I love it though. Wesley, we know what to do. If I told you it was gonna rain every time I said gumdrops, then if you ain't getting an umbrella after I say gumdrops, after a couple, something wrong with you. You know what's finna happen. Why aren't you getting ready when you know what's finna happen? You know what I'm saying, Wes? Now the Fed moves markets. Yeah, you ain't the only one, King. We all the way to the bank, my boy. So look, the Fed moves markets because rates affect borrowing costs, business conditions, and how you and I, investors, how we value future profits, right? I want y'all to understand this, though. The market do not only react to the exact words, they also react to the tone. You don't understand that shit. Y'all, I don't think y'all hear me, though. If he do so much as sneeze, we reacting to that shit. If he say good morning instead of good afternoon, it means something. Hey, who can bring clarity to what I'm speaking on? Who know what I'm talking about? Mr. Stay Ready, what's up? You must know how to make the bots or something. I know what you're talking about. Yeah, no, for real, they do. He'll get on there and he'll say something, the market will tank. And if he say it a different way, it'll go up. It's almost like a code word, I'm telling you. The Fed speeches and the power of the tone, the power of tone is important. Like if I said a sped, if a Fed speaker sounds more worried about inflation We gonna think that the rates could stay higher longer if the speakers sound more comfortable and open to easing, some shit later on down the road. Some parts of the market may breathe easier. You know what I'm saying? So I don't want you to hear one sentence and jump. I don't want you to do that. You don't want to do that. You got to slow the hell down. Slow down. Okay? So your first reaction is not always, the first reaction is not always the final reaction. I do know how to make them and deploy them, and I never traded in my life. Okay, man. Might have to get you to make some robots then, man. You know what I'm saying? I'm not against them. We want to use them for good. We can use the power of them. Let's build some. Now, where was I at? So I want to talk about interest rates before I move on. You know what I'm saying? So interest rates, they like the cost of borrowing money, right? Whenever that's high, whenever the cost of borrowing money is high, it can slow down spending and business growth. When borrowing costs come down, that can make it easier for people and companies to borrow and invest. The stock market cares because many stock prices are based on what investors think the future will look like. See, y'all learning about these leading indicators. You don't know this, what this whole live stream been about tonight is giving you the ability to see what's about to happen before it happens, or at least give you an edge. It gives you an edge. I have people ask me all the time, how do y'all know what's going to happen? It's shit like this, because historically speaking, this is what happens. Statistically speaking, this is what happens. No, it does not always rain when clouds get dark, but for the most part, it's just letting you know it could happen. It might happen. It's probably about to happen. Okay. It does not always rain hard because it's sprinkled, but if you feel them sprinkles and you don't get the hell out from my Dodge and you just, if you fail to plan, you plan to fail. Right? Now, if the rates look like they're going to come down, then some of them growth names may get support. But it's not the only factor, but it is a major factor. You see what I'm saying? I like to make sure I'm taking simple, clear trades. Is this shit going to beat being fancy and confusing every time? Now, a lot of people hear hedge funds and they don't know what the hell going on either. Hedge funds just sold stocks at the fastest pace in a long time. I think since Liberation Day of last year, they sold about the same amount as they did last year, right before the market, or right during that crash of last year. How many of y'all remember last year when the market gave us those beautiful fucking prices and then fully recovered in less than a year? Who remember that time Bobby Boucher? It was at the Orange Bowl, and he I was just playing. He said the Sugar Bowl. I don't even remember. I ain't seen Waterboy in so long. I just remember that part. But no, for real though, who remember that shit last year? The people that do stock market analysis lives without a clue what they are talking about on here, yeah, their names be Joshua Splacavelli. I can't stand them type of people, man. I don't even like listening to them. They be ignorant. But anyways, like I was saying before I was rudely interrupted, we was talking about the hedge funds. So when I saw that the hedge funds were doing a lot of selling, I don't want y'all to think that the crash is guaranteed. The crash is not necessarily guaranteed. I don't want you to, I don't want you to think it's nothing and ignore it. Okay? Both of those reactions is lazy. I want you to instead think about it like this. So you got big money, which is the hedge funds. They are reducing their risk. That to me is a clue. Remember, I told y'all, pay attention to the clues. That's letting me know that the professionals are getting more cautious. And if they are repositioning ahead of uncertainty, what does that tell you? Hold on, let me read some comments. Question, please, brother. Go ahead and ask away, Tyson. You making any investment buys? Lots of opportunities right now. Curious what you are long-term in. Wesley, I'm not. Are you in the Discord, Wesley? You know what I'm saying? I drop it all in there. I could go over it now, but it's a whole conversation. I like to give you some due diligence behind it. I don't just want to give out. We're not just giving out signals and call outs. Didn't know you had one. Yeah, and Wesley, you've been on here for about a year. We might have been chopping it up for a year, though, Wesley. I am one of zero. The link is in my bio. One of one. She said I am one of zero. That means ain't nobody like this. Yeah, the link is in the bio. All right, that's the dude from Billions in the Restaurant. No, I just like having a network of people. You can literally just take a screenshot of the candle chart and build a trading bot. Bro, Mr. Stay Ready, hey, I'm gonna need you to calm down about these robots, Mr. Stay Ready. What's up with you and these robots? You won't shut the hell up about these robots, bro. You geeked up about them for real. You better build one, man. I forgot all that talking about it. You in here telling us about, ain't nobody in here interested in them robots as much as you is. Talking about I got 3 of them. Okay. We see your yo-yo. We see your marbles, man. What got you into the financial? Oh, here go TikTok with this bull telling me I need to show myself. What got you into the financial economic sector? Do you still work or you're now a full-time trader? Tyson, I am in the financial sector, and I'm full-time in the financial sector. I'm in the financial services. So I chose to do something that I don't want to retire from, right? I picked a career that I don't want to retire from, that I love doing. I love money. I love financial literacy. I love teaching it too. I didn't even know I loved teaching it. So, you know what I'm saying? And when you say full-time trader, I don't like the words full-time. I'm in and out the fucking market like, 5-15 minutes. And if I'm taking a swing trade, I'm not sitting in front of the screen 8 hours a day. I'm in the trade and I might come back and close that shit 2 months later. You know, if not a week, if not a month, but I've stayed in trades for months. So using the word full-time is kind of, you know what I'm saying, overrated. I wouldn't say full-time, but if you ask if that's my primary source of income, it is a strong source of income. I have multiple sources of income, and you should have multiple sources of income. Everyone should create several sources of income and invest into assets. Don't just be to where the stock market is the only way you're making money. Yeah, TikTok just kicked a lot of people out of my live because I wasn't showing myself, but it's okay. It's a liability to trade with your own brain power. Now we can't compete with the bots. All right, Mr. Stay Ready. I hate to do this to you, but I got to mute your account. I didn't want to read nothing else about no robots, buddy. Now we want to talk about positioning. I think y'all understand what I mean about these hedge funds and why it matters. Positioning, right? Positioning means how Duchess, chill out. Positioning means how investors are currently placed in the market. How are you placed in the market? Hardest thing I've ever done was in the game in 2008 when I lost it all. Yeah, Wesley, that's why we encourage people to make sure that they keep at least 3 to 6 months of income. Hell, COVID taught us we need 9 months of income put up for emergencies, right? What if y'all just imagine this real quick. I need all of y'all to imagine this, and then you will know why what I just said is so important. Imagine that we all together, this is a hypothetical situation. Let's say we all bought a stock that cost 50 cents. Okay, tomorrow we bought that stock, it cost 50 cents. Okay, and then next week, that stock shot up to $250 a share. We only paid 50 cents per share. We all got a lot of shares. Now, let's say some shit happens in life to where you have to sell your shares. Life hits you. Something happened. I don't know what it could be a funeral, you know, God forbid somebody pass away. You ain't have life insurance, which I also sell. So inbox me if you don't got that. But yeah, life insurance. So you got to end up selling your position. Your house caught on fire. You don't got home insurance. So now you got to replace everything in your house. So now you got to sell your shares. A flat tire. So now you got to sell your crypto. Like sometimes life happen and you got to sell your shit because you didn't have that emergency funded account put up. You didn't have 3 to 6 months of income put up so that you don't have to, fuck up your good positions. You in a good position, and I'm talking about one bad thing could fuck up months of progress. I mean, you don't want, years of progress can be wiped out. Right? So positioning matters. Are you heavily invested or are you lightly invested? Are you leaning bullish? Are you leaning bearish? Are you hedged or are you exposed? What do I mean by hedged? I'm not finna put all my money into Dollar General. Hedge. Diversify. Or are you exposed? If something happened to that company, you're going to lose most of your money because you got 90% of your money in one thing. So this matters because the markets move. They usually move not just on news, right? But on how crowded people are on one side. Somebody asked me, was I talking about volume? Now I am. If too many people are leaning the same way, one surprise can force a fast unwind, right? So that's why you're gonna see a lot of violent moves, even when the news seems like it's small and it shouldn't matter. The move is not always about the headline size. Sometimes it's about your position size. You see what I'm saying? And this is a powerful lesson in life too. Pressure will always reveal where people are overextended. 2008 wiped out years. That was rough, but an anomaly. Yeah. Yeah, but we prepare for that, Wesley. We prepare for it. Reaction over prediction. I want y'all to really, grasp this because this applies far beyond trading. All right. So a lot of beginners want to predict because prediction feel like control. It feel like it. This is the delusion. In the stock market, futures market too, and the crypto market as well. But in life, control is limited. Ladies and gentlemen, what you can control is your preparation and your response. That's what you can control. Now, reaction over prediction means that you respect any new information that you get and you will adjust instead of forcing your old belief, right? So what do I mean by that? You had your mind made up that the stock market was finna go up. You got some new information, but instead of you adjusting, you married to one side. Oh, audio is dropping out, says Leslie. Okay. Mic check 1 2. Mic check 1 2 1 2. Can I get a mic check? What's up? Can y'all hear me? How do you prepare for that though, sir? I had my emergency fund in bank. My port was wiped instantly. Loud and clear. Okay, what do you mean? How do you prepare for what? A recession? What do you mean? You said you had emergency fund in the bank. So when life hits you, use the emergency fund. Money gonna help you. But if it hits you hard, it just means you have enough emergency fund. Life be happening. Trading futures helped me grasp this. Yeah. Well, you talking about reaction over prediction? It matters so much. It's so important. So in trading, this is going to mean basically watching what price actually does after earnings. After a Fed speech, after a policy headline. So in life, this means not pretending that your first plan is perfect whenever reality changes. Don't be delusional. Okay, you being able to adapt is not a weakness. Adaptation is not a weakness. It is intelligence with humility. Okay, in what way do you think volume in crypto will bring within the next 5 years? Asking because volume makes me skeptical. Well, Tyson, crypto is something that you can try to predict it all you want, but you're going to be just about as accurate as your local weatherman. You know what I'm saying? You might be right sometimes, but crypto is just one of those things, man. But if I look in hindsight from how crypto has behaved in the past, it's going to go back to $200,000 and beyond that. The chances of crypto not hitting $1 million is slimmer than it is. Slimmer than what you think. How about that? I'll put it that way. Somebody says, I quit crypto last week. Yeah, I don't quit, Wesley, when it's down like this. right? I quit when it's up. I quit. I get out when it's up. I'm cool. You know what I'm saying? Not right now. Crypto all about cycles, says Chris doing work. That's right. Now I gotta show my hand because TikTok gonna do some old crazy shit and say, show your live in the background. You not moving enough. You not moving enough. Okay, TikTok. I'm a real person. Okay. And it stabilizes, then I'm out. I'll be back. Just need to wait for liquidity to return, says Wesley. That makes sense. Now, I want to explain price action without making that shit sound mystical. And I ain't talking about the rapper. All right, so a lot of people teach price action like that shit is magic or something. Tyson says, I'm still on volume, brother. What does it bring on gold? What do you mean? Oh, I'm here. I'm here, Duchess. What's up? What's the question? What do you mean? Can you rephrase that question about what does volume bring on gold? Do you mean like how much volume is on gold? Okay, let me see where your comment at real quick. But futures is open all day, so it's more of a reaction-based market rather than a prediction. Well, they are trading the future price of something, Swan. Okay, I have a question. If our dollar is going down, is it smart to have money on hand? Mattress money? No, Duchess. Money, it's not. No, it's not, because money is growing. Money is growing inflation, right? So we got inflation growing. So it's really losing value because of inflation. Your money is losing value because of inflation. The value of the dollar is going down. If you don't beat that with compound interest in a good way, it'll affect you. So mattress money doesn't work because it's not growing interest. And as time goes by, because it's not growing interest, because your money is not making money for you, it's actually being eaten away by time. Yeah, Wesley, it's back. Gold is a safe asset again. Wesley says, have a high yield savings account. So where should I put it? LL, all in the market. The Duchess asked a very valid question. So for educational purposes only, I would tell you that a lot of people put their money into money markets. You know what I'm saying? Which is basically like a savings account that's attached to the stock market, okay? So you could do your own research, Duchess, or inbox me. I think I got your number. We can go. I could point you in the right direction. You actually got my contacts. Like my colleagues can help you out with that. Yeah, that or a high yield savings account would be my second option. You're welcome. Now, volume brings context to gold. Somebody asked me about, I like SoFi too. With gold being a tier 1 asset, should we still trust it as it attracts a lot of investors? Yeah, so there's no doubt in my mind about gold and silver, because it's not just about us buying it because it's value. You understand? It has value. More than just jewelry. They are using they need gold and silver and copper for the technology that's being built in these data centers, and with AI booming the way it is. Yes, this is actually one of those times where you can, people gonna take profit, but I don't see it doing anything but being caught up to by silver. Possibly silver could possibly catch up to gold. I know that sounds crazy as hell to even think about, but just consider it. Just think about it. When you say AI needs wiring, that's right. Correct. What companies do we do our research on? The ones that you trade in. How about that? The ones that you trade in. I know it's a broad ass question, but yeah, I'm gonna give you an example. Whichever ones you trade in, like I got a cousin that don't do shit but buy tennis shoes, and I'm like, you buy Nikes a lot, buddy, and you can, it costs you about $120 for a pair of Air Force Ones. You could have bought 2 shares of Nike and been a part owner of the company. Okay, my sister buys a shit ton of Starbucks. I'm like, why don't you buy some of the shares of the company? Why don't you be a part owner of the company? See, I am a money magnet. I attract the money, it comes to me. I don't chase it, right? When you chasing something, that means it's running from you. You chasing something, that means it's running from you. And Bitcoin, you know, a lot of people put their life into it. So that's where they at now. They don't like it. They ready to leave it the hell alone. My bad, meaning what companies do we do our research that has to do with AI wiring? Look up data center ETFs. Chris, doing work. There's a lot of research that needs to be done, Chris. I advise you to join the Discord because we got a very good community inside of there. We definitely can get you that information. My boy Depanda, my boy Thighbone. I know these some crazy ass code names, some kid next door ass names, but that's how Discord is. I don't know why the hell they named themselves that. But yeah. Come in there though. We definitely got we got a section in there that's all we talk about is AI companies, AI stocks and stuff like that. Price action though, y'all. What was I talking about? Price action. Before I teach y'all about the orb strategy, I always want to talk a bit about price action. Wait, you say Panda? I think I'm in your VIP. Yeah, Wesley, I'm pretty sure you are, bro. I'm pretty sure you are. I'm like, wait a minute, I didn't see you before. I'm pretty sure you in my Discord, bro. I didn't seen your name before. It's only 390, I think 392 members in there. So it's a tight knit community. So I pretty much know all of y'all. But anyways, price action is simply how buyers and sellers. Oh, this is a horrible picture. Hold on. Thank you. I appreciate that. That's a horrible picture. There we go. Y'all can see that better. I mean, put a W in the chat if that look better. $11 new followers out of 1,500 live viewers is painful. It actually says 43 people in here right now. So I should have at least 30 new followers. So y'all hit the follow button if you haven't. If you learned anything in the live tonight, or at least if I made you laugh, smile, anything, at least hit the follow button, right, to support me. I would highly appreciate it. I really do. It helps me out with the algorithm too. It's hard out here, y'all. You know, y'all know how this new TikTok is. So, you know what I'm saying? Chris doing work. Thank you for liking the live. Again, y'all, if you haven't hit the follow button, I'll wait. I'm going to give y'all a few seconds to hit the follow button before I give y'all this new strategy. You know what I'm saying? Before I teach y'all about price action, support and resistance, stops. Thank you. I appreciate it. LA to MIA. There we go. Thank you, T-Mac. That's what I'm talking about. That's what I'm talking about. Thank y'all I appreciate y'all. Everybody that hit the follow button. Thank you. Guys, I've been through the ringer with many groups, trading a long time. His group is fired. Thank you, Wesley. So yeah, price action. We want to pay attention to how buyers and sellers are behaving on the chart. It is the visible record of a fight. I like to look at it like a tug of war battle, right? Are the buyers stepping in at certain levels? Are the sellers smacking the price back down at a certain level? Is the price moving cleanly or is it chopping sideways? You know what I'm saying? You don't need to turn this into a religion, but you know what I'm saying? You do need to pay attention to the charts because that's the evidence. Some of us don't know how to read a stock chart. This is the simple part of trading. Put a W in the chat if you want me to go over this real quick. Because you're tired of looking at candlestick charts, super confused. I'm glad you followed me too, LA to MIA. Okay, Red Velvet, y'all. I got y'all. So whenever you're looking at a candlestick chart, right, and you see red candlesticks and you see green candlesticks, they are just telling you it's telling you a story. The red candlesticks are telling you that the price went down in value. The green candlesticks are telling you that the price went up. So when you see a red candlestick, it's letting you know that the price went down from a certain level down to a certain level. The top of the red candlestick is going to tell you where the price started at. And then the bottom of the red candlestick is going to tell you where the price ended at. The candlestick I got circled right here, okay, it has a very long wick. The wicks are the parts that are sticking out of the rectangular shape of the candlestick. See, the candlesticks have a rectangle shape, but there's two lines, a line sticking out the top and the bottom. Those are called wicks, just like a candle has a wick that you light, okay? So a stock chart, again, a candlestick chart is made up of many vertical bars called candlesticks. The candlesticks represent the price range of the stock on that given day. If I'm on a daily chart, each candlestick represents one whole day of time. If I'm on a 30-minute chart, each candlestick represents 30 minutes of time, and so forth. Now, the candle body, I was just telling y'all about that, the rectangle shape of the candle. It shows the price of the stock when the market opened and when it closed that day. You get to know what the price was at when the stock market opened and where the price was at by the time the stock market closed, just from looking at the top of that candlestick and the bottom of that candlestick. Okay, they taught us this in school, but a lot of y'all was too busy putting bubble gum under the desk and shit and writing love letters and all that extra shit or blowing spitballs. I don't know what you was doing, but they was teaching you about the XY graph, you know, the line graph, the pie graph, you feel me, candlestick graphs and stuff like that. So hiding under desk from nukes, right? That was just stupid ass fire drills, Wesley, and they had us playing the recorder. But anyways, the wicks, the skinny parts, they're going to show you the lowest and the highest price that the stock reached within that day. Okay. So if you look, I'm gonna go back to a candlestick chart just to show you real quick what I mean. Now, this candlestick that I have circled, it has a very long wick and a very short square at the bottom. It's not even a rectangle. Now, this tells me that the price opened up at the top of that little small square at the bottom, right? It opened up there and immediately it went up. That's what happened today when we traded SPY. The market opened, SPY went up to 690, and then it shot down from 690 within that 15-minute time frame. It went up to 690, and it came all the way down to the bottom of the square, and then it closed. After that, after it closes, another candlestick opens right next to it, okay? So now this candlestick closed, it opened at the top, and it closes at the bottom. We know that because it's a red candlestick. Red candlesticks open at the top and close at the bottom. A green candlestick opens at the bottom and closes at the top because it's showing you that the price went up from the bottom up to a certain level, right? It's easy to remember. Red candlesticks is showing you something fell down. Green candlesticks is showing you something went up. Okay, so take a look at this graph. And at the bottom, it says example number 1. And it says, we're going to look at the red candlestick, and it opened at $100. The stock opened at $100, right? Let's pretend this is Amazon. It opened at $100 a share. Now, it went as high as $101 at one point and as low as $94 at one point. But eventually, it closed at $95. That created the candlestick. That's what you are looking at when you see these candlesticks. The same thing for the green candlestick. The stock opened at $95. It went as low as 93. And then at one point, it went as high as 104, but it eventually closed at 102, right? So you will notice that the more you start to look at a chart, I don't care if you got a paper trade or just look at the price in live time. When the market opens, I want you to put it on like a 30-minute. No, let's use a 1-minute chart. That way you don't have to wait forever. Pay attention to a 1-minute chart and watch it grow. Watch it open. Watch it, wick, watch it close. That way you can learn price action. Okay. I want you to learn price action. That way you won't be confused. You will not be confused. You just need to know this because it's not perfect, but it is direct evidence of what the money is doing right now. Okay. All right. So now I can explain a little bit more about support and resistance in a way too. So support and resistance. Wait a minute. Is anybody still confused about that? If you're not, just put a W in the chat. Hit the follow button if you haven't already before I move forward. Did that make sense, y'all? Are we clear? The price action is important and knowing how to read the chart. What happened? Where everybody go? What y'all on? Y'all wake up. Wake up, wake up, wake up. Perfect sense. Okay, cool. So support and resistance, LA, it can be explained without, me scaring anybody. But a lot of y'all already know what it is. It's okay. You know what I'm saying? Thank you for sitting through it. Now, support is an area where the price has found the buyers before, right? I like to think of support as the floor. That's what we like to call support. Support is the floor. Resistance is the ceiling. So the price will come down to that floor and it'll bounce off that floor and it'll go up to the ceiling. It'll bounce from the ceiling and go back down to the floor. The price will bounce from the floor to the ceiling, to the floor to the ceiling. If you buy when it's at the floor, sell when it's at the ceiling, cha-ching. Same in reverse. You sell when it's at the ceiling, cha-ching. Sometimes the price gets to the ceiling and it doesn't always return. Sometimes the price gets to the floor and it doesn't always go back up to the ceiling. Right? The price it can be a fake out. The price can get up to the ceiling and you think it's about to come back down, but it got your ass and it went up instead. It could be a breakout. You could think that the price is finna hit support and return to resistance, but it could actually just be going straight down. It could be a retest where the price breaks support, comes back up, touches support, but doesn't get back into that trend line. So, yeah, it did a good retest. Good break and retest. So I just want to make sure that we clear about this. Support is an area where price has found the buyers before. Resistance is an area where price has found the sellers before. These are not magic lines that I put on a chart. These are zones where behavior showed up in the past. Let's look at it again. Let's look at another Let's look at another chart. It's a little screenshot I took. Fuck it. Here we go. Here's an example. Look at the two red lines. So I had support at 680 and resistance at 683. So when the price fell down and it hit 680 and it didn't drop below 680, I drew that line for my level of support. And when the price came back up eventually to 683 and it failed to break above 683, that's a level of resistance. And when the price failed to break above 683, look where it returned to. Look where the price returned to. Drew, I just kind of gave it to you. How's your strategy compared to index dollar cost average? You're going to win with the index dollar cost average. What you want me to tell you? You want some type of guru or something? What you looking for? But hear me out. Hear me out. During a big news week like the one we got now, all right, so these zones where behavior showed up in the past, these zones matter because the news can push the price into these zones very fast. And the reaction is going to tell you a lot. If the support breaks and the price stay below it, that is a warning. If support breaks and the price snaps back above it, that's a trap. It could trap people who sold too late. If the resistance breaks and holds, then it can show strength. I want y'all to start watching behavior once it gets to key levels, key areas, not just random candles in the middle of nowhere. Stop trading random candles in the middle of nowhere. Are we clear? Are we clear? Right now, I'm your personal trainer. We in the gym, and I just caught you in the bathroom eating a honey bun. I just smacked the honey bun out your hand. I don't want to catch you doing that shit no more. Crystal clear. Okay, yeah. So now we about to go ahead and go over. I'm going to go ahead and teach the because I think I'm stalling a little bit too much. Let me get to the gist of it. We're gonna talk about this for a second. All right, opening range breakout strategy. Good thing I got back up, honey bun. Oh, you picked your shit up off the ground? You eating honey buns off the floor? So that means you just gonna keep losing money. Don't do that. That's my honey. Y'all fat as hell. Look, let me stop. TikTok, big back spot can meet back down to 680. And if we close below time to short, yeah, I see something like that could happen too. But yeah, Orb in the breakout strategy is a duo. Is that him? That's right. So who wants to learn what the Orb strategy is? Anybody in here want to learn? Or how many of y'all already made money? Put a fire emoji in the chat if you have successfully made money from this strategy and you know what it feel like to have this type of edge in the market. It don't always work out how we want it to, but if you use Coach Price risk to reward ratio, you will be all right. You only taking 1% of a loss on the trades where you wrong at, and you not over leveraging and positioned in a fucked up way, then it won't matter to you because you didn't have too much dip on that chip, so it didn't affect you to take a loss. Now, Orb traders today laughed all the way to the bank. Laughed all the way to the bank today. Even the futures, even if you traded futures, even if you traded the ES or the micro SPY. Yeah, this Orb strategy, right? So again, this is something that a lot of y'all, this is a useful beginner strategy that you can learn, okay? Orb stands for opening range breakout. 3 words, opening range breakout. Sometimes opening range breakout or breakdown. Sometimes it's the breakdown when the move goes lower. Today it was a breakdown. All right, opening range breakdown. Biggest L is understanding the strategy and mastering and not having money to trade. Says, is that him? That's not the biggest L. The biggest L is having money to trade, knowing the strategy and not being disciplined enough to carry it out. That could be worse than that. But when you don't have money to trade, at least you don't have money to lose. Is that him? You don't got money to lose either. Who's to say that you would be winning? You know what I'm saying? So take advantage of that time. You can get money. You feel me? Start focusing on cash flow. You shouldn't even be trading if you don't have money to trade. You got to focus on getting money that's coming in, build multiple sources of income. The more money you got coming in, the more buying power that you can have. I respect you not trading if you don't have the buying power. I don't respect the crackhead shit, like people pawning, TVs, or I've seen people donate plasma. I didn't see the worst. I've never done it. The worst I've ever done was DoorDash for crypto. Not getting paid in crypto, but I would take my money and buy crypto with it, and it didn't hurt me none. Somebody says biggest L is having capital but no knowledge on how to trade whatsoever and lose big. Yeah, that's right. That's right. Now back to the Orb. All right, so how do I explain this? I got to make sure that we are using the first part of the market session. That's what we want to do. We using the first part when the market first opened up, 9:30. As soon as the market opened, we are using this 15-minute time frame when the market first opened for us to build pretty much a box, right? And then we're going to watch what happens when the price tries to break out of that box. That is all it is at the core. That's all it is. So what you see I got circled right here, the first 15 minutes of the day, that's what SPY did. And it gave me this range between 687 and 690. All I needed to do from there was go down to a smaller time frame and wait and see if the price was going to stay inside of that box between 687 and 690. If it did not stay inside the box, okay? Hold on, before I continue, Dion from the city says, I have the money coming in VA disability. I just don't have the knowledge. I just put money in my Roth IRA. That's the smartest thing you could do, Dion from the city. You're doing the best thing, actually. Okay, you can learn how to trade on the side after you have built a solid financial foundation, Dion. So congratulations to you and your bloodline for you building a legacy and being an architect of your family's legacy, man. I respect that way more than I do somebody that's just trying to trade, but they haven't done that part. You have to build the foundation first. Somebody says, I use the 1 minute. That's all I use. And I'm usually out of the trade by 11. Says, is that him? Yeah. So again, the opening range. This is a simple strategy, and it's simple on purpose. But simple don't necessarily mean easy, right? Because there's a fork, right? A fork is, a fork in the road is the other way that this could go too. But yeah, like I said, even speaking of forks, a fork is simple, but people still eat like fucking pigs. So the problem is usually not the strategy. The problem is the person using it without the discipline, right? So Orb is not just a trade setup. It teaches you patience. You got to have patience because you have to wait for it to happen. You can't just wait. Oh, the market open. I'm finna buy something. I'm just going to get in the trade. You got to have self-control. And a lot of beginners, I'm going to keep it real with you. They going to lose. They going to lose because they start trading before the market has shown its hand. You don't even know what it's finna do. You just trading. You just going to jump in just random. You don't know what the hell going on. You just buying. Just because you're excited. Sometimes holding your breath while you in the middle of the trade. I know a lot of y'all, on that dope. I'm talking about dopamine. You get high. You get high off of dopamine every time you trade. All right. The first burst of action. All right, the first burst of action is where a lot of people get trapped during this orb strategy, right? So it's going to force you to slow down and let the market draw the first map. That's what that first 15-minute candlestick is going to do for you. It is a map. All right, this is why I like teaching beginners this strategy, because it's going to give your brain structure whenever your emotions want speed. Okay, so the opening range is just the price high and the price low during the first chunk of the session. Some traders use 5 minutes and then they enter on the 1 minute. Some use the first 10 minutes. I use the first 15 minutes. Okay, the exact number matters less than your consistency matters. You're going to pick one. You're going to keep it consistent so that you can learn what it does over time. If you switch from the 5 to the 15 to the 30, every time you feel nervous, you're not trading the system. You just, you experimenting, like my partner said I was doing. Are you experimenting? You are negotiating with your fear. I started editing music and stuff like that, but there's a recording software whenever you in the studio. It's called Studio One Personas. They just got bought out by a company called Fender. And a lot of producers and engineers, they don't like Fender. So he said I was experimenting because I like Fender. But anyways, that's neither here nor there. It's off topic. So I want to show y'all, let me see, the future. Show y'all the futures. Studio One is dope. Yeah, it is, DJ. But they just got bought out by Fender, so we're going to see how that turn out. But anyways, so this TrendSpider, this ES chart that y'all see, it's showing you a real move with real levels. You understand? So I can see the opening range high and I can see the opening range low lines, right? Y'all probably can't see them. My bad. That this means that the opening range high and the opening range low were marked clearly. I can also see the short entry labeled around 6,898.50 cents. And the risk-based target lines marked as 1R, that's 1 risk, 2 risk, 3 risk. So that's excellent, right? Now I can pretty much show you that a trade is not just I think it's dropping. This is literally a structured plan with the entry, I got a stop loss, and I have targets set to where I plan to take profit at. You understand? So the price pushed up early and then it failed to hold strength. This matters because beginners think every time they see a green candle early, that means it's finna be a bullish day. No, don't buy calls just because you see a green candle. Sometimes the early push is a trap. You in a bull trap. The opening range high and the opening range low, those lines are the edges of the opening box. What up, JoJo? So you think of them like the fence around the first battle zone of the day. When the price is inside that box, the market is deciding. When the price breaks outside that box, the market may start something. It might be starting a real move. I said may on purpose because it's not every time. This is not guaranteed. This is not financial advice. I'm just teaching you a strategy. Sometimes it's a fake out, right? We just talked about that. We just talked about how sometimes it is not a breakout. It is actually a fake out. And I want you to know. A fake out is when the price pops above or below a level. People it pull you in and then it reverse. This is why you don't just trade a line touch. Support and resistance for the day. Yeah, Chris doing work. You gonna wait for behavior. You gonna wait for proof. You gonna wait for confirmation. All right. I just wanted to make sure that I explained that the the reason behind using opening range highs and opening range lows. You know what I'm saying? You need to pay attention to this. Now, again, I want to make sure I use SPY. Let me go back to SPY. This is too advanced for me. I feel slow. Hey, Dion from the city. Check it out. I apologize for that. I don't like that. You know what I'm saying? I don't like that you just said that. So I want to do my best to try to make it simple for you. What don't you understand about what I'm saying? What's too advanced? We talking about the direction of the price, right? Whenever you trade in a stock or a commodity, Dion, it is a lot to take in at once, but I'm going to slow it down. Because it is a lot to take in. Y'all, you know what I'm saying? Take it easy. It is a lot to take in. But those same stocks that you buying and putting inside your Roth, Dion, you can go and you can map the trajectory of the price. You can track the price and see how good the company does over time. Sherry, everything you trade on got a toolbox, and you can open up that box and draw on it and use a trend line, horizontal line, etc. Get with me outside of this live. I'll show you if you want to share your screen or whatnot. But yeah, Dion, everything. Even let's use Nike again for an example. Okay, let's say you trade in Nike, right? And Nike is $90 a share, right? Whatever. And then next week it's $100 a share. And then the week after that is $90 a share, right? And the only reason you was able to see that is because you paid attention to the chart. Maybe you study in the price. Sometimes you don't even got to look at the damn chart to know that. Some people, they'll go and buy a contract that's $15 out of the money, and they never look to see if that stock even do shit like move $15 within a week. If that stock never moved $15 in 1 week before, why would you expect it to do that now? Why? Now, I don't want to get off topic. We're going to go back to the opening range breakout strategy. All right, because we talking about how to trade this. So this is going to be above your head because I started from the beginning, but you kind of came in on the ass end of the live. So watch the replay. It will be on YouTube, and you can find that by clicking on the link in my bio. Somebody says you will absorb the knowledge. You just got to keep showing up, even if you're not trading that day. That's right. You're going to get it. It's going to start to dawn on you. But let me tell y'all something. If you plant an apple seed today, can you come back to it tomorrow and pick an apple off a tree? Can you come back a month later and pick an apple off that tree? Some of y'all plant the seed, but don't got what it takes to stay there to see your efforts compound. Yes, it is. Yes, this is the order breakout strategy, user 47462618. Again, when you get the other lines, the red ones, when you get the other lines, the red ones on the chart, I drew that you draw them on the chart. You could draw on the chart. You could put a lot on. You'll be amazed. You just get on there and practice. You can put a lot of the lines. If I'm answering your question right, I hope I read it right. All right, so I already marked these clean levels. So you can see the blue resistance areas around 687 and 690, and the red levels around 680. I got some down there at 681. It's really lower than that, 680. It's a level of support. But check me out. So this circle area near the upper blue line is what I want y'all to pay attention to. All right, so this is where a lot of beginners got tricked at. The price looked strong. It pushed up into resistance. It went all the way up to 690. People probably felt late and they chased the move. They like, damn, I'm late. And they got in. The price failed and it dropped back down. This is why the orb and level trading work so well together. Okay, so this is not just about the first range. It's also about what the price does when it reaches a known decision zone. Hey, you still in here, Dion? The price is going to act like a bouncy ball inside of a house. It's going to hit the floor. It's going to hit the ceiling. It's going to hit the floor. It's going to hit the ceiling. When it hit the ceiling, Dion, it's going to hit the floor after that, buddy. You can bet on that. Okay? And if you do, and it do, you make money. It's quite simple. When you, and I can explain it deeper than that. And this, don't take what I said and run and jump off a cliff with it, but do some research. Definitely take your time and learn, because trading stock options is very much so a different beast versus investing. I encourage people to trade after they invest. Invest first and trade the rest. Invest, then trade the rest. Doesn't this have a win probability of like 55%, provided you spot fake outs and avoid them? Yes. I'm telling you, it is easy peasy, lemon squeezy. It's easy. If the price cannot hold above resistance, that weakness matters. If it breaks and hold, that strength matter. Baby T, what up? All right. So either way, we reading behavior. We not guessing. Now I'm gonna show you another. I'm gonna show you I'm gonna show you something else. Look at this. So when the price fell down from 690 and it hit 687 and it didn't go back up to 690, that was what I was telling y'all about when you want to pay attention to what the price is about to do. Step 2. It's right here. That's right. This is the second part right here, user 47. Because remember, you see the 15-minute high and the 15-minute low, right? The 15-minute high and the 15-minute low would be 690 was the 15-minute high, 687 was the 15-minute low. So my area to get into the short was right there at the 687 mark. Yes, you could have got in at 690, but I like a high probability trade. Now y'all can see I got this area down here marked 683. After coming off the lows, this is also good for me to teach y'all another thing you should pay attention to. The market moves in legs, not in straight lines. Okay. A lot of beginners think a down day means every candle should be red all day. No. A bearish day can still have bounces. Okay. A bullish day can still have pullbacks. So the price is recovering from this lower red area, pushing back towards the middle red line around 683, right? And this is what I mean by the retest. This is where it matters if you trade in options, because you got to have discipline. You don't just buy calls because the price bounced, right? And you don't just buy puts because the earlier move was down. You need to say, is the price reclaiming and holding this level, or is this just a weak bounce into resistance? I'm telling y'all again, I'm going to slow it down again. The price shot up to 690. It shot down from 690 to 687. And it came back up a little bit, but it failed to go back up to 690, right? And then it fell down from there, okay? So when you're doing an opening range breakout strategy and you on a 15-minute time frame to start out to create that box, the opening range high and the opening range low, you're just marking the top candle and the bottom candle. I mean the top of the candle and the bottom of the candle. When you go to a smaller time frame, it'll be more candles inside that box. That's why you go into a smaller time frame, so that you can get more candles and so that you will have a better entry. The orb strategy for options is still a price action strategy first. You see what I'm saying? So the option contract is just a vehicle. This is going to sound a little complicated for y'all. I'm going to make it simple though. When you trade in stock options, you basically saying, I bet the price of this stock is about to go to this level. When you buy in the company, you just like, hey, I believe in the future of Walmart, so I'm going to buy some Walmart shares. When you trading, you saying, hey, Walmart, let's pretend Walmart $100. You say, hey, I bet Walmart going to be $105 by Friday. And you make money every time it goes in that direction. You know, as long as it's going in the direction that you predicted, you making money. That's what trading is versus investing. Investing is, let me buy some shares of Walmart. Trading is, I bet Walmart going to be $300 by the summer. So we want to look at the price, Dion, if you still here. We want to look at the price to determine where it came from and where it's about to go. So when you trade in stock options, that's what you're doing. In one contract, when you trade in options, it's worth 100 shares. When you just bought Walmart, you paid for each share one by one. When you trade stock options, you get to trade 100 shares at one time in one contract. So you pretty much you borrowing the shares for a certain amount of time. It's a vehicle. So a lot of beginners, they focus on the contract before they actually understand the chart. They going to ask, what strike price should I get? What expiration should I get? How much money should I look to make, right? But they still don't know whether the price is breaking out, breaking down, chopping sideways. They don't know the different market phases. They can't tell you shit about consolidation, correction, or continuation. They can't tell you nothing about a uptrend or a downtrend, you know, and that's a problem, man. That's a problem. That is a problem. I highly advise people don't do that. Learn. So, yeah, the orb is pretty much, we don't force the trade. If the opening range is messy, the price keeps snacking back and forth, then it's not, you know, the orb works best when the price breaks and actually goes somewhere. If the price keeps popping above the range and falling back in or breaking below and bouncing back in, the market is telling you it is not clean yet. A beginner gonna see this shit and still be like, so should I trade both sides? No, that's the trap. Be more patient. And I've been reading a lot of comments. A lot of these people in the comments helping y'all out, man. They got some pretty good commentary. I like it. Swan says, you got a strategy for futures in the Asia session. So with futures, it's a bit different, right? So futures and options are like driving different vehicles on the same road. When you trading SPY in the stock market versus trading the SPY future, the futures may move fast and they're going to require you to have tighter discipline. SPY options may add extra difficulty or complexity, right? Because options prices often change based on a lot of different variables. Time, demand, you got all the Greeks. But the road is still the market, right? So the road still got levels, momentum. You got fake outs. You can trade the orb strategy with futures as well. Yes, you can. So I like to teach chart behavior first, because once you understand that, you can take that and learn. You can trade Forex, futures, stock options. All right. You need to know, though, how execution changes depending on what vehicle you in. So I won't get out of the trade the same way in the futures as I would the stock options, because futures has more volatility. I'm going to have a tighter stop there. Meaning I'm going to be ready to get out the trade faster in futures than I was in the stock market, because futures can leave you. Okay, you can say, hey, I'm only going to get out when I'm losing $50. And if you don't got this shit set, predefined stop loss, then by the time you try to get out, you done lost $150 because of slippage. Slippage is the difference between what you thought you was going to get in or out at versus what it actually ended up being by the time your order got filled. Any questions? Anybody still confused? Remember, I'm going to say it again. The opening range breakout strategy, as soon as the market open, you start out on the 15-minute candles, 15-minute chart. You're going to wait for that first candlestick to form. So by the time 9:45 come, because the market opened at 9:30, 9:45 come, you're going to have that first 15-minute candle. You're going to use the bottom of it and the top of it to mark the box. Then you're going to go down to a 5-minute time frame. And that's where you want to wait for this to happen. You want to see if the price is going to break below that bottom line that you made, or if the price is going to break above that top line that you made. And not just break above it, it needs to stay above it. That way it ain't a fake out, and it's really a breakout, or it's a break and retest. If it's not, y'all, the trade should only go in one or four ways. It's either going to be a big win, a small win, a break even, or a small loss. But you taking a big loss is never an option. You taking a big loss is never an option. Why do you do that to yourself? I do not know. Did you know you didn't have to? Did you know you got control over how much money you lose? Did you know that? So make it make sense. Because if you don't have to lose the money, why do you? I know what you're doing. If I leverage $500, do you know I don't have to lose $500? You know I can get the fuck out the trade at only a $20 loss. I could say that I could put I'll pay $500 for an option, hypothetically, and say if at any moment I'm down $20, I want out. If y'all don't grasp that, what up, Joe Butler? If y'all don't grasp that, you gonna get hit again and again and again and again and again. And if anybody ever tell you don't use a stop loss, don't listen to them. They don't listen to them. If they say that, say, can I trade with your money? If they tell you not to use a stop loss, the next thing you should tell them is, okay, well, let me trade with your. Teach y'all, I'm just gonna show y'all something, because I know a lot of y'all don't know what the hell to do during a fake out. I got you. I done been there. Right? So fake breakouts. You might see a fake breakout. The price might be trading within those lines. You say, Coach, I got the support and the resistance lines, but it tricked me. Deserted Pineapples, what's up? Thank you for coming through. So if the price does something like a fake breakout, no, drill world, it has been a lot of volatility up until that lunch hour, right? Long as it ain't lunch, long as you ain't trading that consolidation during lunchtime, where it just seemed like everybody taking a break until power hour come back around. But anyways, fake breakouts, right? These are a part of the game. This is why I want y'all to be mature. A fake breakout does not mean that the strategy is broken. It just means that the market tested one side and rejected it. That's why I told y'all to make sure that you utilizing a stop loss in case it might not be that day. And if it's not, guess what you gonna take? A small loss or a break even or a small win, because it ain't gonna be no big loss. A big loss is not an option at Ironworth Trading. We don't do that. If I catch you taking a big loss, you know your ass is grass, Mr. Postman. You ain't got to worry about catching no dogs. You got to worry about a dog catching your ass. No, I'm just playing. I'm just playing, y'all. It's gonna be on you because what you eat don't make me shit. Lunch is nice for scalpers. It stays range brown. I don't know, Swan. I ain't fucking with it. It's just low volatility, and you can get theta. You can get screwed with theta that way. You know, the price not moving fast enough, especially 0 days to expire. Now, the fake outs. What I was saying about that. So, if you take a orb, if you take a opening range breakout trade and it fails, your stop loss is there for a reason. You're going to take the loss. You're going to keep it small. You're going to move on. A lot of people fuck up because they take a small fail, right? They take a messed up breakout and then they turn it into an emotional war. They move the stop loss. So they say, okay, I was only going to risk $20. They see the price getting ready to get them out the trade. They see the price going down, about to hit that spot to where they lose that money. And they, instead of them just taking the loss, they move the stop loss to where they say, okay, I'm willing to risk 50 instead of 20. Because I don't want to get out. I don't want to get kicked out the trade. So, excuse me, I'm going to risk more. Huh? Take the loss and move on. Don't add more money to the losing trade. And then you start revenge trading instead of trading the actual setup. That is when it's not a chart problem. That's when you have a behavioral problem. You got a behavior problem. So imagine the first part of the session like the market stretching before the workout, right? So the opening range is going to show you how wild, calm, strong, or how weak, or, you know, the early fight is. Once the range is built, you got a frame. See what I'm saying? Above the top of the frame, you can mean that the strength is good if the price can hold above the top level. Below that bottom of the frame can mean weakness if the price can hold below that. So inside the frame means indecision, consolidation, sideways, scalping. So this basically, you don't got to be confused. Somebody says, caught them puts today. That's right, Lewis. We walked all the way to the bank, laughed all the way to the bank. I've blown so many accounts doing that. Never again deserted pineapples. We ain't doing that shit no more. Real talk. I know how I feel, though. I know how I feel. So since this week got a lot of big events and it's a little risky, I wanted y'all to know that the orb setups are stronger when they line up with the day's bigger market move. If the broad market is weak, the small caps are weak, your chart starts showing some failed pops into resistance, like it looked like it was finna go up, but then it came back down and it made a lower high, the orb breakdown may have a better chance. If the market is strong and it's staying above certain levels, the orb breakout may work better. So that don't mean always short bad news and always buy good news. You see what I'm saying? It means that the orb strategy, the opening range breakout, if you use it inside of context, it'll work for you. Context is the difference between trading and guessing. Right? So again, let me go back to SPY before I lose y'all. I don't want to lose you. I don't want to lose you. The price went up to 690. The price fell back down to 687. It did not break back above to 690. So 687 was the entry, right? It's simple. I switched to a smaller time frame after the 15-minute candlestick was up. Y'all paper trade it, practice it. I only trade orb until I get better trading after 11:30 a.m. I'm done. It makes sense. And let me put it this way, I'm telling y'all, this one, if you add this to your bag, it'll make you a better trader. I don't know how many losses you take. I don't know how much of a loss you take when you take a loss. But I'm telling you now, if you master the art of taking a small loss, it is going to help you so much. And you gonna personally call me. I'm telling you now, because I got that. I'm having a That's So Raven vision right now. You're going to call me and you're going to thank me for sharing this information for you. Only if you execute the information. Other than that, you're going to be like, damn, I wish I had listened to him. when you using a 1-to-3 risk to reward ratio, right? Let's look at how you did over the duration of 100 trades. So out of 100 trades, using the 1-to-3, the bottom row, if you use the 1-to-3 risk to reward ratio, out of 100 trades, you can lose 74 of them and still be profitable. I don't think y'all understand what I'm saying, so I'm gonna break it down even simpler than that. I'm gonna use a very a good explanation, I'm gonna say a good analogy, right? That I use to help people understand what I'm saying. You more than welcome, Amra. Ashe, you more than welcome. So if I gave you a quarter, right? And we flip this quarter, every time it lands on heads, you make $3. Every time it lands on tails, you lose $1. Now, some of y'all rookies and some of y'all quitters, so you're going to flip that quarter 7 times and you're going to quit because you lost 7 times in a row, $7. You just, even though it was, you like, you know what, this is a scam. I done lost $7. I don't want to do this no more. But smart traders know you need to keep trading. You got, if them last 3 trades out of them 10, you could have made $3, $6, $9 and wiped out them 7 losses off 3 trades. 3 winning trades wiped out 7 losing trades only because you made sure that you took a very small loss. Okay? Tell me right now, if you took 10 trades and you lost 1% on each trade, and then the next day you made a 42% trade, you won 42% on one trade. You just wiped out them losses. You could have a losing streak and wipe out a whole losing streak with one trade if you make sure that all your trades that you took as losses were small. So your trade should only go in 1 or 4 ways: a big win, a small win, a break even, or a small loss. Losing a lot of money is never an option. If you can do that, you're going to stay in this game long enough to learn. And if you can learn, you can earn. But I was more so talking about risk to reward ratio. But yeah, I agree. I'm not doing multiple trades with that anyways. I'm getting in and out and I'm done. So I'm going to do 1-to-3 risk to reward ratio. Makes sense to me, Jay. Why would you do anything less than that? Who wants to, now if I told you I got a quarter and every time you it land on heads, you get $1 and it lands on tails, you get $1, man, you're going to be there flipping all fucking day before you walk away profitable. And another thing, excuse my French too. I apologize, y'all, for the profanity. Let's say, right, you've been in the trade. And man, I really got to stress this out because I see a lot of people struggle with this. If I only have $100 and I put $100 on the trade, I'm over leveraging. I used everything I got on that trade. If I got $1,000 account, okay, and I'm using $500 at a time, I'm over leveraged. That's why it hurts so bad when you take a loss, because you had too much money on it. 1% can be $100 sometimes. Somebody says, I think 1-to-1 is better because you winning more psychologically keeps you in the game. I guess. I don't agree with that, but whatever. You have to win more times than you lose with the 1-to-1. And you know how hard it is for you to win more times than you lose? One, Jay. One. I'm not doing no more than that. I'll take it. 1. However y'all want to put it, Hunter. My point is, you can control how much you lose. You don't have to take a big loss. That's my point. You can take profit wherever you want to take profit at. What matters is you taking this 1% loss And then you like, you know what? Fuck what you talking about, Coach Price. I'm going to take a 5% loss. That same person see it get to 5%. And instead of them getting out the trade, they like, I'm just going to wait a little bit longer. Then they get to 10% of a loss. And they could have got out at 1% of a loss, but they would rather just give money to the market. They donors. They donators. They liquidity in the market, talking about some liquidity. And then it gets to 20% loss. They could have got out at 5%. Next thing you know, they down 60% on this trade. And they could have got out at 1%. So I don't personally give a fuck about what anybody else do, because what they eat don't make me shit. I'm going to use the stop loss. I'm going to teach my friends and family here at Ironworth Trading how to do it. And everybody else can, get on down the road. Don't you ever eat nothing that might be a low. Get the fuck out the live. I can't help you. I don't know what to tell you. I don't know what to tell you. All right? To each his own. But with that being said, let me look at, I was looking at Roblox. What subscription on TradingView you prefer? No subscription on TradingView, T-Mac. I only use TradingView. I stopped fucking with this company because I ain't like the CEO. They had some bullshit going on last year, a little lawsuit, but my nephew them still play this shit. And as long as I'm buying Roblox and Robux and Roblox and V-Bucks and all that shit, I'm going to get my money back. I'm investing in this shit. Take-Two Interactive for all the VCT 2K they got, and all the time they call it, all the time that Grand Theft Auto going to get when it finally come out. You understand? TradingView is okay though, but I don't fuck with them, T-Mac. They okay though. They decent. They got a lot of features on there. All right, I think I went over everything though. We went over SoFi. Talked about it's just a good buy right now. It was $18 5 years ago. It's still at the same price now. And a lot of people would say, well, Coach, why is that a good thing that is $18 a share now? If it was $18 a share 5 years ago, Coach, if I had bought it 5 years ago, I didn't make no money 5 years later. Well, 5 years ago, it was almost 2 million members with 360 million gross profit. Right now, it's another company. Same price, different company. 13 million, over 13 million members now. This is a better buy now. LA says this has been amazing. I appreciate you so much. Y'all have been amazing, actually. You guys have been an amazing audience. Put a W in the chat if you learned anything tonight, okay? Hit the follow button, hit the notification bell. And if you didn't learn anything, but you would like to, or maybe you want me to simplify this even more, right? I would love to help you out. But it's kind of hard when I'm trying to teach at a certain level, and some people at the kindergarten level, some people at the grad school level. All right, so I got to kind of be broad. But if you want me to come tailor it for you in your level, I got you. Just inbox me, and I would love to help you. All right, y'all are more than welcome to. It's my pleasure, actually. I see y'all tomorrow. We're going to make this Tuesday, February 24th. We're going to make today twice as good as yesterday and half as good as tomorrow. Remember, the link is in my bio if you want to join the community. Also, to subscribe to me on YouTube if you missed this live show and you want to go back and watch it from the beginning. The replay will be available on YouTube by tomorrow. Y'all enjoy the rest of y'all night.